Welcome to the Telltales Podcast, where we discuss cash flow and its pivotal role in investing. I'm Mike Nicoletti.
And I'm Jason Wallace. Along with our co-host Hunt Lawrence, aka Mr. Cashflow, we're here to explore how cash flow drives the economy and investment performance.
And don't forget to join our email list at telltales.us to get the cash flow memo. It's about 20 pages covering 80 companies, U.S. government's finances, and the energy sector.
It's like having a masterclass on investing in your inbox every week.
The following conversation is intended for informational purposes only. You should always do your own work to determine if an investment is suitable for you.
Jason, I think Mike had to come home because the weather in Paris just didn't compare to San Diego.
I could believe it. I hope it improves before the Olympics then.
Yeah, true. Oil is down $6 or $7 in the past week. There was, here on Exhibit C, where we always start in the back, there was an OPEC Plus meeting on Sunday in Riyadh, the capital of Saudi Arabia, and they announced that they were going to start to phase in some of this withheld production in the fall. I think it's a variation of what the Saudis have done in the past when they thought people were not living up to their commitments to restrain production. But it was done with everyone signing on, Russia, the other OPEC countries. The UAE got an extra 300,000 barrels a day to their allocation, which they've been campaigning for. And I think the initial decline, remember we talk about oil having a value based on supply and demand of 60, but having a $20 risk premium. Risk premium, of course, Gaza, rest of the Middle East, Ukraine. But the other risk premium is the Crown Prince and his advisors deciding that they, in order to keep the price of oil up, they'd have to curtail some more production, which I don't think they want to do. If you look at the chart, their production capacity is easily 11 million barrels, and they're only producing 9. So that 4.4 surplus, more than half of it, at least half of it, is Saudi. So the question is, what will happen next? That will be determined over the next few weeks. Some of the oil press comments that, well, they won't follow through with this. If they don't see $80 Brent or more than $80 Brent, they just won't add the production in the fall. I'm not so sure we'll be able to come on this every Wednesday, but I think the Saudis are going to go through with this plan. Interestingly enough, they also, over the weekend, they've been working on it for a week or more, sold $12 billion worth of Saudi Aramco stock to people outside of Saudi Arabia. So, we'll see. Once again, if you own a really good oil stock, if you own DOG, for example, which I think is the best, I wouldn't sell the stock because with the weakness in oil, you may see it cheaper. Exhibit B, gas. You can see the gas prices coming up some, which is good news. Obviously, the prompt oil price last Thursday was $80. Now the prompt oil price is $74. Those future prices are all off by about $4. So, we'll see. Gas is looking better, not the LNG demand. Notice that the LNG demand in 24 is not up a whole heck of a lot from 23, but what is up is power. And there's a great deal of belief in the gas business that increase in power from 35.5 Bs a day to 37 understates the case. And we'll get to it in the front of the memo, but a lot of that is power demand for data centers. Exhibit A, we'll have a debate between Joe Biden and Donald Trump later this month. I think it's fair to conclude that neither one of them is going to advocate lower spending or higher taxes. So until November 5th, I think we have to expect that getting, say, that fiscal 24 budget deficit of $1.570 trillion, if that could be achieved, that would be a great improvement. It's just a matter of spending less. You can't do anything about interest. Interest in 25 will be like $800 billion, up from less than $400 billion before COVID. But that money's been spent and interest rates are higher. But that all other category, which was $910 billion before COVID, now at $1.4 billion, that you just have to chip away at that. I hope there's a bipartisan commitment to do that. And with that, I think we switch pretty quickly to the front of the memo. I want to have a discussion on page 2, which is the software companies. I reduced the prices because Salesforce, ServiceNow, Snowflake, to a lesser extent, Oracle, were all off pretty significantly last week. I guess the question for Jason is that if your IT budget isn't going to go up by more than 5 or 6%, when everyone's in your organization is advocating for more capability with large language models and AI generally, does that make you less likely to sign new contracts with software companies?
I don't know if it's less likely to sign new contracts. I think they have contracts in place for all these companies, and they're trying to get them to expand their usage of the systems. And there's just, from what we're seeing, especially at a Salesforce, there's not, the return on that investment isn't there yet. I don't think they have fully baked products using generative AI. They'll certainly come, but it's hard to justify the increased spend to train and build these models into their software platforms right now. They have to do it. I think using AI in your product is going to be table stakes in a couple of years. So they have to do it or they get left behind. So I don't think there's hesitancy to expand the contracts, but it's just not going to be as big of a impact as some people believe.
What about Snowflake? Mike, do you see Snowflake as, I can see where it might have more impact on Salesforce and ServiceNow, but Snowflake users may need Snowflake even more? Or how do you view Snowflake's role?
Right. And part of the approach for Snowflake is before you can go do generative AI with your proprietary corporate data, you need to have your ducks in a row, if you will. And that involves having the right data in the right place and have it in an environment that's accessible. Snowflake's kind of prided themselves in the past, and the reason they were adopted so quickly for data analytics purposes is that it's a pretty simple system to use once you get it all up and running. They're going with that same approach with their call it a technology stack for generative AI. It's going to take years for companies to really get going in full steam, if you will, on that platform. In the same way that the early versions of the Snowflake databases took time to get up and running and took time to capture as much spend as they did. So, I think long-term, it's in a very good position. There's also a number of other companies that are vying to be that same solution. So that's the question does their solution win in the same way that their previous solutions have? Or does an alternative solution rise to the top?
Yeah, I think that's an important part to articulate is NVIDIA made the chips that made this possible. Now we're seeing the hyperscalers buy those in large quantities to build their base models in the infrastructure. They claim that they're getting a return on that investment within a year, and then projecting that out 4 years. So that's the Salesforce and the ServiceNows using those language model tools, software tools that say AWS and Microsoft are putting out, they still have to build products on top of that before the consumer or the business user sees it. So it's a years long process. And I don't think the software companies will see their return for a couple of years.
Jason, is Oracle in a little better shape because they also are building data centers for GPUs?
Probably, yeah. They're playing both sides, and they have a couple really big customers utilizing it, so it gives them the base capacity, to use a power generation energy term.
Right. Do you think for software providers that when NVIDIA, Jensen, their leader, gets up in Taipei and says that he thinks GPUs will replace CPUs because they're just more efficient and more productive, if you were sitting on top of, well, let's say in Snowflake's case, say $3 billion of revenue from helping clients with their databases, is that something you worry about, that you'll somehow get obsoleted because GPUs will replace CPUs?
I don't think there'll be a replacement. The workloads are certainly, if not shifting, all the new ones are on GPUs, but the use case for a CPU doesn't go away. Your query logic will still run on a CPU. So when you ask a database for like a SQL type command, like a database command, to go search for something, it's going to use a CPU. All the processing that puts the data into the format that it's going to query behind the scenes, whether it's using a language model or some other AI model, that's all in the GPUs. So the CPU doesn't go away. If you think about like streaming something from Netflix, that's not a multi-threaded application, which is what the GPUs are good at, parallelizing your workload. Streaming something to a user doesn't get parallelized. Serving one query back to a user doesn't get parallelized a whole lot, but a lot of the upfront work that puts the data in a format that then you're going to look at and analyze, that's a parallelized process that happens behind the scenes or before the user gets to the computer to ask it that question.
Okay, let's take a quick break for a message from Oak Cliff Sailing.
So this is the craziness that is Oak Cliff Sailing on a Wednesday night. We have the adults, a lot from Cold Spring Harbor Labs here to do Wednesday night fleet racing. We have the high performance sailors that sail in tiny little dinghies getting some experience on the Match 40s. And then we have the Bermuda team, which is going to go out and sail the Far 40 against the Sagamore Yacht Club sailing. And then they're coming in, everybody's having al dente for dinner, and then they're going out and doing a night sail. So if you look like any of these people, you are welcome. Become a supporter. Come sail with us Wednesday night fleet racing, Thursday match racing drills. I'm Dawn from Oak Cliff. See you soon.
And now back to the show.
I'm going to flip over to page 3, which is the chip page. Do you think that NVIDIA is in a position with their data center business to provide same kind of premium CPU product as GPU? Is that something that they should be trying to do, or where do you think the future is there?
They're doing it. A lot of everyone, including ourselves, the focus is on the GPU side. So, Mike, do you know offhand how much of their sales are from the CPUs?
Well, one-off CPUs, no idea, but every GPU, data center GPU now ships with a CPU on the same board. So I think that NVIDIA's approach is to build the data center from the ground up, and that would include the CPU. So how that gets orchestrated as far as workloads for software projects, it's still sort of to be determined. But I think that's why Jensen is pushing this narrative that everything's going to move to an accelerated compute format. Obviously, it's in NVIDIA's interest if everybody moves their code base over to something that runs on NVIDIA chips. But their goal is to build the data center. So that should include all of it.
And it includes the networking, which is another overlooked piece.
Mm-hmm.
Well, right. They finally broke networking out. The only thing that's grown faster than that Mellanox acquisition from a run rate revenue perspective is NVIDIA itself.
Mm-hmm. It's neat. Jason, if you're AMD or Intel, I mean, I guess Intel goal is to be a second source or a third source to Taiwan Semiconductor and Samsung. And you don't get the sense that they believe they can design GPUs or CPUs or whatnot and keep up or overcome the lead that NVIDIA has. But I mean, that's a tall order, isn't it, to try to replicate what TSMC's been able to do in the foundry business.
Yeah, it's a huge challenge, but that's historically where Intel has done well. I have a higher hope that they can compete with Taiwan Semiconductor versus being able to compete with NVIDIA. So Pat Gelsinger says that AI is a focus with their GPUs, but I don't think they have any market share in that. And then AMD, they're projecting $4 billion in AI GPU sales this year. And NVIDIA did north of 20 to the data center last quarter.
Right.
So I think AMD is in an unfortunate position of being the AMD in the AMD Intel CPU competition. They're going to be in that same role in the GPU competition.
Right. Do people still hold or think it should be held ASML given how much of equipment Taiwan Semiconductor and Intel and possibly Samsung are going to need?
We sold our position in ASML last quarter, or maybe it was early this quarter. The rationale there is that we've known that their growth is predominantly predicated on increased shipments of DUVs to China. The pace at which that happened was very fast and continues to be growing pretty fast. The downside is, if you're a Chinese fab, is utilization rates in Chinese fabs are somewhere around 40%, which even if those were cost competitive fabs with the existing ones, which they're not because they're trailing edge capacity, operating at 40% is never going to be a successful operating model. China has a bunch of incentives in place, sometimes on a per chip basis, and some ways that can be gamed in order to make it profitable for companies to stand up these things. And my impression is that stuff's going to get stamped out. The government is still clearly supporting the semiconductor industry, but they don't want to support it merely, in inefficient ways. So as the quote unquote corruption surfaces, and you could think of corruption as the government institutes a credit, some sort of a payback for every wafer or chip produced. Well, why not spin up a fab that produces smaller wafers? Because that's cheaper. So that these types of things are happening apparently there. And the big picture is that it seems to me that they're oversupplying these DUVs. On the EUV side, the fabs have gotten quite good at delaying their adoption of the high-NA EUV technology by using process called multi-patterning. So it doesn't mean that high-NA EUV is not going to be adopted. It's just not going to be adopted quite as quickly as ASML would like. So with all that in mind, we felt like the valuation was fairly full. That said, it is sort of a monopoly. Today, that lithography piece of the puzzle for semiconductor fabrication doesn't happen without ASML. So they could always just raise prices, and maybe we didn't bake that into our model well enough. But yeah, our conclusion was it was time for us to part ways.
Right. We can't leave the page without talking about NVIDIA. My prior page before I updated it had NVIDIA's revenues at 60 billion, and obviously was low. The last quarter was like 27 or something. I probably overdid it, upsizing it, but at 110 billion, with looking at the margins, their operating costs, their R&D, their sales effort, their CapEx, their income taxes, it comes to like over 60 billion of free cash flow, which is remarkable. I mean, this was a business 5 or 6 quarters ago, which would have been happy to be doing, 4 billion of free cash flow. I don't, in my career as an investor, dating back to, arranging mergers and whatnot as an investment banker, I've never seen anything of this size go up by so much. So the question I've been asking Mike, Jason in the morning, so directed to you, do you think in the next 5 years that NVIDIA can maintain that sales level over 100 billion? Because I guess they might have some margin compression, but 100 billion plus sales means, something like 60 billion a year of free cash flow. I mean, is that would you want the over or under on that? I mean, do you think that's 50% probable, or how does it look to you at this point?
I think it's a greater than 50% probability. I think they'll maintain and grow from here with the in my opinion, the explosive growth that you were describing, that has to be over. The way I've been thinking about it lately is comparing NVIDIA sales to the percentage or the overall CapEx spend on data centers globally. Last year, the global CapEx data center CapEx was $260 billion. Roughly 70% of that goes to IT equipment. The rest is infrastructure and buildings and whatnot. So of that number, NVIDIA is, as of last quarter, capturing about 40% of that. That's going to include, as we said, not just the GPUs, but some of the CPU spend and networking. So can they grow their percentage of revenue or percentage of market share in data center higher than 40%? That's a much bigger challenge, I think. So I don't think the spend in data centers is going to, obviously it'll fluctuate. If we have a recession, it may go down, but internet companies are going to keep investing in data centers. That need's not going to go away. So they've captured an ever growing percentage of that data center spend. I think as that CapEx spend went up and then their market share of it went up so quickly, that's how we saw the growth. Now I think we're in a more steady state. They're going to maintain that market share. And then I think forecast now for CapEx spend on data centers is 15 to 18% annual. So we'll see if that plays out. But I think they'll definitely maintain where they're at.
I guess for both of you, could they increase their share beyond 40%?
In some cases, for sure. If again they're building and delivering soup to nuts data centers, right? For a lot of implementations of NVIDIA data center, you're buying everything from NVIDIA. Everything else is it comes through from the building itself, the cooling systems, assuming you're not, that are beyond the liquid cooling of the new chip platforms. So easily could see that. The question is how do they continue to win that high of a percentage of the business? And I think that the thing to think about is Intel, right? Intel had initially had a monopoly, but its customers forced them to fork over intellectual property to AMD so that they would have a secondary supplier of some of these chips. And Intel just dominated AMD for practically all of their existence by implementing an optional target, which Gordon Moore coined as Moore's Law. And Jensen's doing essentially the same thing now with NVIDIA. And the question is are they going to be able to keep up with that? If they do, the increases in performance will be more than make up for the cheaper prices available for inferior equipment. So that's the bet as of right now. And if you're a data customer or data center buyer of all this equipment, that's the calculus that you're running.
And the analogy is really, really close, right? Intel had to license the x86 platform to AMD. Could it be a situation where NVIDIA has to license the CUDA platform to them as well?
I doubt it, but yeah, be interesting.
Me too. We're about out of time. Any healthcare news?
Right. So the FDA produced draft guidance on regulation on platform technologies. So what that means is they gave a couple examples, but to me the takeaway was with CRISPR, with gene editing therapies. If there is a prior data set that used CRISPR to, say, prove safety, a new therapy, a new application to the FDA can then use that prior data along with their application to prove safety of the CRISPR platform. So the idea is this will apply to several different types of platform therapies. So if you're creating the Vertex treatment for sickle cell uses CRISPR, if you're treating a different condition, a different indication with a different edit, but based on the CRISPR platform, you can use some of that safety data or the historical data collected from other pharma companies to supplement your application. So that's a big thing for the industry. Should speed up time to market, speed up or reduce cost for running trials and bringing things to approval to market.
Right. When is the Apple Developers Conference? Is that the middle of next week or?
Monday, the 10th.
Yeah.
10 a.m. Pacific.
I can pretty well promise everyone next Wednesday that we'll spend at least 15 minutes on what Apple unveils.
Well, we're hoping it's what we called. So.
Yeah. And but we also promise a little more time on healthcare next week. And with that, everyone be well and stay healthy. Talk next Wednesday. Take care.
The views expressed on this podcast are the host alone and do not constitute an offer to sell or a recommendation to purchase or a solicitation of an offer to buy any security nor a recommendation for any investment product or service. While certain information contained herein has been obtained from sources believed to be reliable, neither the hosts nor any of their employers or their affiliates have independently verified this information, and its accuracy and completeness cannot be guaranteed. Accordingly, no representation or warranty, expressed or implied, is made as to and no reliance should be placed on the fairness, accuracy, timeliness, or completeness of this information. The hosts and all employers and their affiliated persons assume no liability for this information and no obligation to update the information or analysis contained herein in the future and may or may not hold positions in the securities mentioned.